And good afternoon. Welcome into Market Talk on this Wednesday, April 27th. Thank you for making us part of your day. Great to have you here with us. I'm your host, Jesse Allen. Find us online, markettalkag.com. That's our home on the web, markettalkag.com, where you can find us all the latest news of agriculture, our radio affiliates, our streaming sources, and much more. It's all online, markettalkag.com. Well, there are no shortage of stories in the trade today to talk about a lot of things kind of swirling around, some that have been here for a little while and some new things to talk about today. Let's bring in our good friend Mike Zuzolo with Global Commodity Analytics joining us here today. And Mike, very busy day on the news wire, and I think the biggest headline of the day was Indonesia, this crude palm oil ban reversing course from comments made on Monday. It's just kind of been a back and forth, but really a big buoy to this soy oil market. Canola reaching all-time highs. Just that seemed to be what lit the fire under the soy complex today, Mike.
Yeah, well said, Jesse. Thanks for having me back again. I think we did sense and change the direction and sentiment of the trade when it came to we've been trading a lot of demand. We've been trading a lot of negative demand off of currencies. We've been trading a lot of negative demand off of IMF updates on global economic strength and really weakness in the emerging markets. And this veg oil, it's essentially a way to protect your domestic supply. So you could classify it as protectionism, although Indonesia is saying this ban, which includes CPO, crude palm oil, and that's not even the important part of it. Refined is so much bigger a percentage of their exports from what I've seen, but they're doing it all across the board with their veg oil markets, and so I think it reawakened the supply bull. And I would also throw out to you the idea that maybe the Indians will be looking at the wheat and maybe trying to hold back on exporting too much more wheat at this stage because they've had some drouthy issues, and we can get into that more detail later.
Well, Mike, let's continue on the soy oil side and look at crude oil as well. I know you have a chart for us here to take a look at on the video feed. Crude oil today, kind of around that 102 mark for $102 a barrel. But just talk about kind of this relationship and this chart and what you're seeing here.
Yeah, if you take a look at the last, say, 5 to 6 weeks of this chart, you notice that the purple is the uh, soybean oil lead month futures, and you notice that it broke out of a wedge and broke to new highs, and we're making some all-time highs in some of the vegetable oil markets after today's trade. But at the same time, the WTI crude oil market has not broken out of its wedge at all. It's been getting more and more into a tighter consolidation phase, lower highs and higher lows, and so that wedge is forming more. And where the green arrow is kind of the point of the wedge, and you can look at it kind of like a spring. It's getting more and more tension in the crude oil market, if you ask me, Jesse, because these lines are getting closer and closer to a point. But the key issue here is the vegetable oil market, led by the palm. It allowed the soybean oil to break out higher. It did it without the help of the WTI crude oil market. And if you go back before, say back 3, 4, 5 months ago, it was a situation where the crude oil market made a low first, and then the vegetable oil markets made a low, and the WTI and the Brent crude oil markets were actually leading the vegetable oil markets higher, and we actually posted a new high in WTI the week before we did in the soybean oil. So it's a neat chart because we've diverged. So the question is, why have we diverged? Well, it's not just what Indonesia has done. That helps explain why the palm oil and the soybean oil have gone up to new highs, but why hasn't the crude? And this is where the dollar comes into play. This is where the Federal Reserve interest rate hikes that are coming within the next week come into play. This is where the China's COVID slowdown comes into play. All of this wraps up. And obviously, the other big thing this week, you talk about a big news feature today. Yesterday, it was probably Russia using the word nuclear again in several different manners when they talked about the war and the United States and Europe getting more involved in the war over there, that they put the nuclear issue back on the table. So that's just all these things have just added to the dollar going higher. You and I have talked about this a lot. where the dollar and the crude oil markets have a very strong negative relationship. So the fact that the dollar is within 50 points of hitting its 2017 high, which takes you to the highest level, and that's that orange arrow here. We're flipping to a dollar chart here. We've been able to take out the 2020 highs. We're now going after the 2017 highs. Look how far back that goes, though. That goes back to 2003, 2004, if you take out that 2017 high. So that screams to me deflation. And that's why that WTI crude oil market has been contained and constrained so much.
I would have to think as well, typically we see a higher dollar and we see that as pressure on the grains. And I know we're not really seeing that necessarily as of late, but one has to wonder, when could we maybe see that throughout all of our grains? And I know in relationship to wheat, maybe it's making US wheat more and more expensive on the world stage, Mike.
Yeah, we're losing demand as this dollar goes higher. And so it goes back to what you and I have talked about for the better part of probably 6 months now, is you have to rely more upon that cost push, weather, supply, inflation. And that's really the bottom line here. And so every month we have to look at the weather and we have to look at competing supplies and say, okay, are they still underneath us enough to not only justify these prices that we're at, but also to even take us higher? And I think as we get into the early part of May and we close out April, thank goodness for the news we got today from southern Brazil in Mato Grosso and Goiás, reporting that their precip in April's down at least 70% in some cases in some of these provinces. And so, USDA's got a 116 million metric ton corn crop for Brazil. Brazil private people are at 115. I'm at 110. I feel very comfortable about 110 after seeing this news story today that Brazil may really have some yield hits to them in their second crop corn, which is 50, 70% of their total corn crop. So the supply, though, is the key now, and that's where it's going to remain the key as long as that dollar keeps going higher. My hope is the dollar peaks. I think I said that last week or the week before, but we've kept feeding the bull in the dollar because of the geopolitics and because of the central banks.
Well, and as we maybe segue to talk a little more about weather here, I think one other note, just with the oil seeds and everything as well, that maybe is not necessarily been touched on a ton, but with all the spring planting delays in the northern plains and maybe even some into Canada, what's that going to do for canola in those regions? I think that's another little minor side story to think about as well, Mike.
No, that's a really great point because it's very timely, and it could become it could go from a minor side story to a major story. Because my understanding, and I've got to do some digging on this, but I was actually talking to a media colleague that you and I both know out of Yankton, South Dakota, was doing a show with her this morning on the live opening, and we were talking before we went on air about the potential for spring wheat acres to be delayed so much that more vegetable oils get planted and more canola gets planted. And I've got to do more digging on that because the way it's lining up to me, Jesse, is if we stay wet east of the Mississippi River and north of the Canada, North Dakota border, then it puts more onus on the oil seeds to justify these high prices. They can justify it if you've got countries like Indonesia doing this now, and then Malaysia maybe does it in a couple months as far as protecting their domestic supplies. But you have to feed that bull, that supply side bull, because of the fact that you've got more supplies coming on theoretically. So this is where the oilseed market, to me, continues to be the best place to get hedges in place as we get into the first week of May.
Mike, as well on the weather front with wheat. We mentioned the northern plains, spring wheat planting delays there, but also rough weather and drought for the hard red winter wheat belt. Talk about what you're seeing with the wheat markets right now. I'll pull up another chart here, the hard red winter wheat historical that you sent me. Um, just talk about what you're seeing in this wheat market right now. Walk us through your thoughts, because we saw winter wheats come off their lows today, but still we're probably the weak link of grains today.
Yeah, we've talked about how I feel like this wheat market is still the leader. And as long as we don't have a corn belt drought, we don't have as much a 2012 scenario as we do, probably more like a 2008 scenario. And that's where the hard red wheat really takes the major focus. And I would say, given the crop conditions we saw on Monday, I don't think the trade really understands how bad is, Jesse, because Yeah, we came in at 27% good to excellent. That was only down 3% from the prior week. But if you dig deeper into these numbers, you're looking at a situation where not just the hard red wheat states, but also the soft red wheat states are in some pretty dire situation right now. And so that's where this chart shows you the 2022 July hard red wheat in purple against the 2008 July hard red wheat. And you notice we're getting a little bit wonky. We're going higher in this current price action instead of breaking like we did back in 2008. And that's because of this continued drought and these continued crop conditions. I just got off the phone with a client after the wheat conditions came out. And I asked him, where are you in terms of what do you think in your crop? And he's out by Hays, Kansas, Zurich, Kansas, probably one of the worst areas in the state of Kansas. And he said, and I'm just reading it straight from his message, it's salvageable. I don't know how. It's looking worse by the day. If we get rain shortly, I can still raise some. Hot wind and dust not going to do it. Definitely the worst in 5 years, probably the worst in 15 to 20. People are starting to just dust in corn just to get it in, hoping for the rain essentially. So this is where you're right on a knife's edge of seeing maybe the worst national yield here in the United States that we've seen in 15 years. And I documented that and went through the numbers with clients and subscribers Monday night after the crop conditions report came out. So this weather model pattern change, the European and GFS model are both subscribing to right now after this weekend, where Nebraska, Kansas, Oklahoma, and parts of Texas get ample rains starting next week. With both models saying that, you got to have your head up and watch for it. But if they don't get it, that's the end of April, and to me, the crop it's too late to help it. So we're on that knife's edge right now with the wheat market and the wheat leading the corn higher at this stage.
Well, and we haven't really even discussed the corn market yet today, Mike. And, on the weather side of things, obviously, slow start to spring planting for corn. I know the I states picked up pace here this last week and hoping for a window here. We're not hitting the panic button yet, but the clock is ticking to get a good corn crop in before we start talking yield loss. And, you look at the corn market today, it was fairly strong. I maybe saw a little bull spreading with the May, July contracts. I know first notice day coming up with July. What are your thoughts with this corn market? What you saw today and some of the weather concerns that could be playing in here shortly.
So let's assume that we don't have the wheat as our supportive feature because these new weather models coming out are correct, and the wheat wants to be a situation where the trade wants to unwind the wheat corn spread. And so the corn then becomes the long side of a spread price action for a while. That supports the corn. The ethanol data today really helps support the corn, higher production, lower stocks. Really nice to see that as we get ready to go in the summer driving season. The other thing that, as I mentioned, was the safrinha corn crop, and that really helps explain why that bull spread was working so well today. And we really need it to keep working because you brought up the magic tool to me to really tell us how tight is. I think all around the country, farmers and grain trucks have been running like crazy because we've hit $8 plus cash corn, and they should be running at these prices. So I don't think the farmer has a lot more to sell. So what does May futures do now when it goes into delivery? Does it try and gain more corn from Chicago? In other words, when you go into delivery, Jesse, it's the seller's option on delivery. And so the seller decides whether he wants to sell that May corn futures at the May Chicago Mercantile Exchange price. So if deliveries are heavy, he feels like that's a good price, and he's going to let the market have those deliveries and issue them. If he doesn't, though, he expects the market's going to go higher and that the cash market is a better place to be and hold off on selling anything and let the cash go higher. So I think this is one of the most critical delivery periods we probably faced in 5, maybe 10 years as the May goes into delivery here this week, especially if we stay wet east of the Mississippi River, because whatever corn's out there is probably east of the Mississippi River at this point, would be my guess, in farmers' hands. And they're not going to let anything go until they can get safely planted. They've already started to tell me that.
Mike, let's move over to livestock here and looking at cattle and hogs. I'll start with the cattle market. Still maybe a little reaction to that cattle on feed report from last Friday. But seeing cattle futures today mixed to lower, what's your thoughts after seeing that cattle on feed report come out, and just the general thoughts in this cattle space?
It's definitely, in my opinion, because of the supply side. And here we go again with the supply side talk between the cold storage numbers for pork, poultry, and beef, and the cattle on feed placements and on feed numbers, Jesse. It's a buyer's market. It's a packer's market. And so instead of 140 being the bottom end of the trade or 138 being the bottom end of the trade, I think 140, 141 is going to be the top end of the trade until we get into the middle of May and we really do start to see some featuring of beef, and we don't work around beef with competitive meats like the pork and like the poultry. So feeder cattle and fats are likely to go lower at this point. Feeders are in a sell signal technically. They have a downside of probably around 137, 138 would be my guess in the lead month futures. After that, though, I think they may be a really decent buy, especially if Oklahoma, Texas, Kansas, and southern Nebraska, eastern Colorado start to get rains and they get their pastures back before the hot part of the summer comes in. Cash feeder steers and calves may really start to pop, 30, 40 days from now. So I'd be looking at feeders to find the support first in the cash market if the rains come in the hard red wheat belt. Hogs have to find some support here, in my opinion, for the cattle market to really find a lot of upside potential.
Well, and with the hogs as well, you mentioned the cold storage numbers. And to me, we saw it today a little more, sell in the front month, a little support in the deferred months, trying to maybe find a bottom here, maybe pulling back, trying to consolidate before, maybe coming back higher. I don't know. What's your thoughts with the hog market?
Yeah, this is where we've collapsed the premium in the futures market against the cash index. That's great because it was $11 plus at one point. I think we talked about that. Now we're down around $4 or $5. So that's handable, manageable, I should say. We can handle that. I think the big thing with the hog sector is that demand is going to put the low in the hog sector because of the ample supplies, tightening supplies, but ample supplies. If we start to see good exports again from any country, just as long as they're above the 4 week average, then I think the low can be put in relatively soon. But demand puts the low in the hogs. So I'll be watching for the demand side of the equation: weekly slaughter data, dressed weights, and export markets.
Well, I know as well. I didn't get to ask you about Russia cutting off gas supplies to Poland and Bulgaria, and then of course we still got COVID worries in China. So there's still no shortage of concerns on the global scale for our ag markets here that we didn't really touch on today, Mike.
Yeah, and I can sum that up in one sentence. We are working against and we are seeing headwinds to the globalization that we've all been used to. And this is just proof positive more that we're going to fracture more and we're going to have more deglobalization and more trade pacts set up between friendly and quote unfriendly countries. So we need to start realizing that in the farm sector, in the ag sector, that globalization may really be something that we don't have for the next 3 to 5 years.
Mike, any other final thoughts for us today?
Just sign up for a 3 month trial. I think it'll be worth your while. I think we put out some really good information. Go to globalcomresearch.com, or if you have a specific question that Jesse and I didn't get to, or that something that we talked about and didn't have time to really go into detail, shoot me a line. You can do that on the website as well.
Globalcomresearch.com. That is globalcom with two M's, research.com. That is where you can find him. With that, Mike Zuzolo with Global Commodity Analytics. Always appreciate the time, sir. Have a great rest of the week. We'll talk to you next week.
Great to be with you, Jesse. Thank you.
Mike Zuzolo with Global Commodity Analytics. That's going to do it for today's episode of Market Talk on this Wednesday, April 27th. Find us markettalkag.com. I'm Jesse Allen. Have a great afternoon.